Good afternoon. The time is almost 1:30 Eastern time, no, 2:30 Eastern time, or 7:30 here in the UK. And I'm just going to recap my trading for today. It's the 18th of October 2023. I had a bit of a migraine this morning and I decided not to trade, but it got a bit better, but I was a bit foggy minded, so I took one small trade not soon after the open, which I'm going to go into right now. And then that's it, I called it a day. So the trade I took was around, it was this trade here, so let's just mark it up on the chart. It was based on the 5 minute and the 2 minute. That's the 2 minute. So the level I was watching was 43.65, and my mind wasn't quite with it properly until about this time anyway. So I saw it come into this area and I didn't take it. I waited for confirmation. I waited for it. Normally I just take it at the level or averaging, but it was a high risk trade, and so I waited for it to go through and then come back up, and my entry was right on my level but on confirmation. So basically when this green bar pulled back up, when this green bar pushed up, it came down and then pushed back up again, so I was in for the long. My stop loss was just about 3, it was about 2, I think 2 ticks below the low of the day. So I never put my stop right on the low of the day, because so many times you can come back and get stopped out where it's a double bottom or something. But what I really wanted to do was just give myself a bit of room so that I wouldn't have got stopped out. And so my stop was basically where that line is. So once I got in, I was in there, and because I wasn't feeling too great, my brain was a bit foggy from my migraine, and at one point I lost left hand side of my vision. So in the pre-market, just before I did my pre-market video, I couldn't even see the left hand side of the screen. So I probably shouldn't have even been trading at all, to be honest. But you know, I couldn't resist the urge. It's one of my levels I've been watching as well. It's in this demand zone as well, which is set up from the hourly chart. And the idea, even though the demand zone is quite a wide zone, what is this, about $10, 56, 66, about $15 wide. It's the point is it draws your attention that there could be a reversal in this area, and so it's time to find a reversal. Sometimes I take it on the edge of the box, and if it's a big area like a daily or weekly area, I would look to average in, waiting for the reversal to come through and push back out. But this area is a bit too big for that. So my entry was at 43.65 exactly, and my target was this area here, all the VWAP. Basically I was waiting for it to get to the 50, came up, and I was so close, you know, there's a double top there. Let's zoom out a bit. So another area I was keeping an eye on was this area here, which is where it consolidated. And so it came in, I didn't get filled because I was my target was a little bit higher, and I wanted to get it before it hit the 50. And so it came back down. I sweat out. I thought it might have stopped me out, but like I said, I didn't move my stop to break even because it would have stopped me out. And I'm trying to stick to my rule of get a target 1 or 2R, and well, that was about 2R anyway. But you know, I don't really go for R's. I go for meaningful places. So my stop's at a meaningful place there. My target was at a meaningful place there, because it's below this area consolidation and natural resistance, and so it pulled back, didn't stop me out, and it's a good example where it came into my target. And in fact, I must admit my target was slightly above, and it didn't quite get to it by a couple of ticks, I think it was. So as I saw it bounce off of that area, or reject of that area, I got out about there, and I'm glad I did, because you probably saw the line I drew. Had I not, then I would have been stopped out on the next push down anyway. So it was a good out there. That's why I went for it. I didn't want to give back profit, and eventually it would have came down. It would have stopped me out, and then we would have seen this big move out. So that was probably the market playing silly buggers. trying to trying to get all the stops from here, which is exactly what it would have done. That's it. That's my only trade. I did consider taking a couple others, but I'm not trading anymore today. I'm going to try and get my head feeling a bit better. One thing I do want to note is the levels as well. These are the levels I come up with in the pre-market and in my pre-market live video. And let's just go through them quickly. So I do the videos at 9 AM Eastern time, around about here. So my levels are in place for this video, and you can see we consolidated on this level, and this is, I said at the time, it's a high risk bounce area, and that's exactly what it did. It wicked through, came back up, but if you played it well, you could have got this for a big push up. And then it came back down, it consolidated that level, and it came push through that level. So you could have even gone long off of that level on this pullback as well, and that would have been a great trade if you got that up to there, added here and out on the high. And what I usually look for, I didn't take this because I wasn't, like I said, I had a bit of a migraine, but my outs is usually when I don't see a new high. So I would have put in that high, then I would have seen that candle, and I put my out probably would have been below that candle there usually. And sometimes I don't hit my target like today, and I let it come also, I say like here, I let it come all the way back, but that was there wasn't really the only place I could have got out there, and it would have been a small, it would have been close. My break even was about here, so I wouldn't have moved my stop to break. I'm trying to keep my stop in this place there because it's there for a reason, unless I hit target or I stop out. And so many times I move to break even, and it comes back and stops me out, and then continues on the trade like it would have done today. Had I took had I took some profit, I may have moved my stop up to break even then, and then try and protect my gains and wait for the next target up. So that's how I would normally do it. So now going back to the levels, this level 43.77 high risk bounce area worked. This level here at 43.72, another high risk bounce, worked again. Didn't really have any levels up here apart from we're in the demands supply zone, so maybe we could have taken the breakdown, but I didn't have any levels defined in that area. The level I took here worked because it pushed through, came back up, retested that level, and then pushed up. And look, it retested it twice there, came back through it again, retested it again there. So that's a good level. And bear in mind, these levels are in place. I put them in the pre-market as well, and you can literally trade between the ranges as well. So had I been more wise, I could have got in there, out on that target, could have been the next level up, got back in again there, target out up here, that would have been a great out, which is exactly what I did. And then saw it come back down, push back up. You could have shorted here down to this level, go long up to this level, short up here all the way down to the next level. As soon as it breaks through, that level is not relevant anymore, but you're playing this range here instead. And then gone long there, it would have been a little bit of a profit. You could have taken it out just there when it didn't put in a new high. But here's a good place. Had you got long there, and you could have added on this bit, on this area here, you could have had this big push up. But here we go. Here's a good example of why I sometimes leave limit orders in place. 43.50 was an area, and it was one of the areas I spoke about in the pre-market as well. Higher probability, and purely because, not sure we can see it on 5 minute. We've got this area where we came back down there a few days ago. So this is the area I was watching, and that's exactly why I drew the level there. And if we take a look and see what happened, it came in, poked to this level, 43.50, and look at that, that was almost a $30 move back up. And that's the reason why, even if you get stopped out on a couple of levels, as long as you hold your stops tight, you could have put a limit order in down here maybe. I generally try to take it before the level, but it's difficult sometimes. But if you're watching your levels and you sort of come in and poke, you could have made a quick market order just to be in the trade, whether you're a bit late as well. It doesn't matter if you're $1 late or something, because it's not when you got a move which is $30. What's $1 or $2 on a $30 move? And then again, you could have rejected this area. Look at that nice perfect rejection area as well. VWAP 200 moving average, a level as well, 43.77, which was previously in play up here, and it's been in play before as well, because look, it was the floor and now it's the ceiling. And you could have just sawn these two topping tails. Look at that, that's a perfect reversal candle. When I say I'm looking for confirmation, this is what I'm looking for. So I'm looking for a topping tail candle and another topping tail candle followed by a solid red candle, maybe a hammer candle as well. That's a sign of weakness. Like we've got this hammer candle here, so you know there's a sign of weakness coming up. Let's look at the volume. So we've got this hammer candle on lower volume than the previous candle, so that's a sign of weakness. And then we've got this candle, indecision candle, but on higher volume, so that means there's more buyers and sellers deciding what to do, so that's on higher volume. And then we've got these two topping tail candles on even higher volume. So we've got the first one there, so that means there's a lot of sellers in this move, so you know the sellers are back. And you could have used the next topping tail candle, got in on a level as well, or the break, or if you want to be more conservative, got on the break of that candle. A double topping tail on a 5-minute candle is almost a definite sell. It's definitely a trade there. And then we broke down, we pulled back on reducing volume, and then look at this, big sell off, and we had increasing volume, and we had small candle, bigger candle, even bigger candle, and that goes as a smaller candle, bigger candle, and then not so, it should normally you want to see a bigger candle, but that means it's slowing down and weakening because the candle is not any bigger. And then we had consolidation, lots of indecision as well. So, and again, this level held its area here, and if you were going to take this level and you're waiting for confirmation, you got this hammer candle at the bottom on relatively high volume, above average volume. Another hammer candle there on smaller volume, which could be a little test, a market testing to see whether there's any sellers back in the market. And then we got this push up. To be fair, that's a bit of an anomaly because it was a solid green bar, but the volume was less than the previous candle, which was smaller. So that could signify a bit of weakness. And then we had this nice push up here as well, a hammer candle as well, and big volume there, decreasing volume as it went sideways, and another push forward. But difficult market to trade. I probably wouldn't have taken that one, nor would I have recognised this was going to be moving up. But again, a top and tail candle, a shooting star you may want to call it. If you took it on the level as well, look at that, it's either on that level, off the VWAP and the 200 moving average like up here, or you could be more conservative and taking it on an actual level which is in play. It broke down, pulled back, you could have taken it on this area for the pushback down, and lo and behold, you could have added again and it come back up to this level, or you could have taken it on the edge of the zone, and look, it's just hit target as we're speaking. So levels are great. I need to play my levels better than what I do sometimes, because there's definitely lots of opportunities I'm missing out on. But there you go, that's another great trade. This is what I'm looking for, and on high volume as well. So it's definitely a sign that there's sellers there and the buyers are weak, and that's exactly what we're looking for. And we've got increased volume here. So this candle's the one with increasing volume, and then a bigger volume candle there, and it's on low volume, so it shows a bit of weakness. And just wonder whether we're going to bounce at this area, or whether we're going to push up, or whether we're going to continue to trend back down and maybe hit the next target. And so 43.50, remember that area, and 43.56.75. They're the areas to keep an eye on. That's the new zone what's in play at the moment. So we're playing the range, as you can see, we're playing this range, playing this range hopefully. So that's it. Quick look at oil. This is the hourly chart on the MCL or the CL futures for crude oil. Currently at $88 a barrel, you can see. And I'm just disappointed myself in my swing trade. Well, I got in on the pullback just here on this pullback, and on that level 82.34, and I got out about there the next day. It's a big move up. To be fair, we're not far. We pulled back to that area now, but like I said, it's got potential to get back up here, and that's where I think it's going to go. I really wanted to try and catch it today, and I had an opportunity to catch it on the pullback into this demand zone, which I missed. And it's only because I had a migraine this morning, so I wasn't really looking to take anything. So here we go, that's the pullback we were talking about yesterday, off of the 50, and bottom tail, bottom tail, bottom tail, and showing we might see a big push up. It is decreasing volume though, but we are heading into midday. Or no, we've headed into midday and we're now, but potentially we could see a bit of a move up. Or look at this, an hour head and shoulder pattern. So potentially we could see it come back down and create this neckline. The neckline happens to be that area again, that demand zone at $86 to $86.50. Got a couple of areas that you could even argue that could be the neckline as well. But yeah, so it's worth keeping an eye on this. We got this top and tail candle, which is a sign of weakness, because obviously at one point that would have been green and came back down and ended up there. Okay, that's it really. Thank you for watching. Sorry it's not a very good video. I said my brain is not quite working properly today, but I'll be back tomorrow at 9 AM Eastern time for the live pre-market, and hopefully we can bash out these levels again and see where we're going to end up. Let's have a quick look at the hourly before we go, see where we are. Oh, look at that. So this looks really bearish. Got shooting star candle there, topping tail, topping tail, topping tail, topping tail, topping tail, and it looks really bearish. And that seems to be an area in the sand to keep an eye on, 43.65, and we're putting in an engulfing candle right now as well. So if we can break the low today, then we've got this bearish engulfing candle. And where could our next target be? If we break 43.50, yeah, it's going to be potentially got a big void below. We could see a big move down, targeting 43.30 or even 4300. This area. These are the next two areas to keep an eye on. Could potentially see. Change that to hourly. So this area here, and the reason I selected that area is because, where are we? 42.9975. Yeah, the reason I selected that area is because 43.10, we've got bottoms of candles, tops of candles, bottoms of candles, bottoms of candles, and 4300, this candle below, is a nice psychological number, and that's a bit of a major area. That's an area to watch for. Bottoms of candles, an area of confidence as well, and it's a psychological number. So if we do break the low today, we can watch out for this area here, 43.40. Let's just mark that up. And then the next area will be this demand zone, 43.30. And you can see we pulled back a few times, had a few little hiccups in that area. It's a pivot from October the 3rd as well. So, and that's why it's a demand area. Yeah, I think that's it. There's very difficult day today. You know, days when it's like this is literally all it's done. Even though you see these top and tails, it's basically sold off and then gone sideways. and it makes it hard to play on a sideways day. So, okay, well, have a great evening, and I'll see you tomorrow. Okay, and thank you for watching.